We've had ADP figures out today, slightly below consensus, coming in at 201,000. Most were expecting a 208,000 mark level. It seems that it's sort of mixed responses to this. Can we perhaps take some good news out of this? And also just looking at the way the dollar responded, we did see the dollar coming under slight pressure.
I think that the positive on this is that jobs are being created. It was sort of in line with what expectations were. Looking at 208,000, came in at 201, marginally off what was expected. Obviously, the big number tomorrow, the non-farm payroll figure. Yeah. But nonetheless, that ADP is kind of a leading indicator in terms of what we can expect for tomorrow's number. If it comes in line, that is positive. We are seeing a rally in equities. We're seeing a general positive sentiment in terms of this job creation environment, which is relatively positive from an equity perspective, if you keep in mind though that the housing market still remains on the back foot. And I think that as job creation starts to come through the market, hopefully that will feed through into the housing market and it will start to sustain that upward momentum that we're seeing. That being said though, I think that the rally that we're seeing is also off a lower base.
Of course, the word there, imperative, the imperative word there would be hopeful, I would say, Brigid. Let's delve into the local currency. We are seeing incredible strength coming through for the rand. That said, the Aussie dollar hit 29-month highs in today's session as well. We've got risk on trade that is also coming to the fore. That said, Jill Marcus, South African Reserve Bank governor, talking about inflation, and she's not going to tolerate any increase in inflation. To what extent has that had an impact on the local currency today?
Well, what you've really seen is you've seen a massive move back into equities as this global good sentiment is returning. I think that the market is desperate for good news. Certainly seeing it across the board. You've seen the Nikkei rally today. You've seen the Dow Jones come in positively, and our local markets have rallied hard. So I think we've seen that positiveness coming through in the form of a rand strength. We're seeing a lot of foreign investment into our local unit. We've seen the rand rally back down to 680 levels. We're seeing a very, very good dollar seller into the local market, which is coming from offshore and which we indicate will possibly even see a break through that 680 level, which potentially could mean we could trade as low as 675 overnight if we do trade within those kind of ranges. What we've seen with regards to what Jill Marcus said overnight was a massive sell-off in terms of the bonds. So we saw bonds selling off sort of 10 basis points on the day. They have recovered slightly as we close the session, but nonetheless, the overall momentum seems to be for that interest rate hike. Obviously, keeping in mind that ECB and BOE will be announcing rate decisions on the 7th of April. Markets concerned about what that hawkish outlook looks like.
Brigid, also something very interesting that Jill Marcus was alluding to. She was talking about there's something else at work when it comes to the local currency, because we have seen outflows so far this year. You've alluded to that as well. Are we tracking the euro-dollar play at this point? Do you think it's just a technical aspect that we're seeing?
Look, I think what we're seeing really is it's an environment where commodity prices continue to rally. We're seeing risk back on. So we're seeing an environment where anything that shows a sustainable kind of recovery or a carry, especially a commodity-based high yielder, does benefit in this kind of environment. And you've seen it in the Aussie dollar, you're seeing it in the South African rand, and that will potentially remain in place until we start to see an actual rate hike cycle coming from offshore and potentially feeding into the local market. I think what the concern is and what you're seeing in terms of your currency drivers certainly are around interest rates. When we see interest rates look like they're going to rally, or we see hawkish comments come out of different regions, you see those currencies rally. You've seen the cable rally, you've seen the euro rally, and as we've said, we've got that risk on trade again. There's that carry trade coming back onto play again.
Yen weakening today. I was listening to an interview with Jim Rogers this morning. He was saying buy the renminbi whenever you can. He holds the yen. He's buying into the Japanese story. In fact, he wanted to buy just before the crisis happened. This only offered him some opportunity. In terms of plays, what are you going long on? What are you looking to short at this point in time with regards to the yen, the renminbi, euro, dollar? What are you looking at?
Well, I think what you can expect to see is I think the yen's going to be supported. We're not going to see massive strength coming back into the yen. You're going to see yen selling, looking to buy currency, looking to invest in other high yielders like those that are likely to go on a hiking cycle. You're going to see the cable strengthen, that's the GBP. You're going to see the European currency itself possibly strengthen. I think that eyes are not necessarily on fundamentals so much as they're on interest rates or hawkish perception. I think that you will continue to see prevailing strength in those commodity-based high yielders like ourselves and the Aussie dollar for now, but the interest rate environment offers the upside risk.